Hello, everybody. This is Rick Geiler here at Silverside Insurance Marketing in sunny Tempe, Arizona. I have online with us today Tony Fiorillo. He is the CEO and founder of Asset Management Strategies in Indianapolis, Indiana. And he's going to talk to us today about an exclusive arrangement for agents who would like to offer fee-based asset management for a referral fee. Tony, thanks for being with us today.
Hi, Rick. Thanks for having me.
Okay, well, if you want to get started, can you give us a little bit about your background and then maybe get into some of the high points on how this referral arrangement works?
Sure, happy to. I've been in the industry over 30 years and am a registered investment advisor. And my educational background, I have a bachelor's degree in economics, and I studied international business at the University of London. I studied behavioral finance at Harvard. So I've got a pretty good understanding of the financial markets and what make people tick. We've been doing this for quite a few years, so happy to share our offer with you guys.
Now, how does that work where agents would refer their clients to you and you would move forward managing that money on a referral arrangement?
Yeah, the common terminology for this is a solicitation agreement. The actual rule of the Advisors Act is 2064-3 that says that we can pay people for a referral for us managing money. And we manage money on a fee basis, and it's an ongoing fee. So it's a recurring revenue stream, not just a referral fee up front. So this would continually pay the agent for as long as that client remained with us. We're able to pay that fee, portion of our management fee, to the agent for that referral, even if the agent is not securities licensed. So there are a couple requirements. One, we have to have a written agreement with the agent, which is really just a short agreement that says, here's what we're going to pay you, here's how we're going to pay you, here's how it's calculated, just setting out the stipulations of that agreement. The other requirement is that we have the client acknowledge that there is this solicitation agreement in place. We've included that in our management agreement, where it says that we may or may not be paying a referral fee. So it's pretty innocuous. I'm not saying it's buried in there, but it's not a point of contention. But I believe that what clients like is that it's not just them looking at whether they can figure out how to trust this person or not who's managing their money. There is now a network of people involved. So I think that people are relieved. If they're sitting with an agent, they already trust that agent. And if the agent says, here's what we have for liquid money, for managed money solutions, I don't do that part. I'm either not licensed or don't want to be licensed. We found somebody that can take care of that for us. And we have a fee-sharing arrangement with them so that we are in the loop. We monitor what they're doing on a continual basis. And if I thought you needed to make a change, I'd let you know that. We recognize very keenly that this relationship is with the agent and their client, and we don't want to get in between that. Even though we may be the manager on that account, we understand that the agent has the relationship, and I think that's ultimately where their protection is.
So the agent would still interact with their client on a regular basis, including managing any of the fixed recommendations into fixed insurance products or whatever that agent's area expertise may be. And then as far as the managed money end, that would be referred over to you. The agent would still be involved in that process. To what degree, Tony?
Yeah, that's correct. And the agent can take as much involvement or as little involvement as they like. If they'd like to be on every phone call that we have with the client, that's totally up to them. If it's a service question, they may not necessarily need to be on the call if the client's just asking for some extra money out of the account or increasing their monthly distribution out of the account. But if the agent does not want to be involved in that, then we're happy to take on that role. But we would still share the solicitation agreement fee with the agent, regardless of what level of participation they had with the client. And I think that our management style, I don't know if we have time to get into that today, but our particular asset management style is a very risk-averse type of approach that I think complements the annuity argument completely. With annuity buyers, a lot of times they're very risk-averse. They're afraid of the markets. They're afraid of anything that can go against them, market-wise. And I think our management style is a great complement to that So what we see is that ideally clients would look to a fixed annuity or an index annuity for their fixed income portion of their portfolio, and then we're providing the management more on the equity side. And I think the two of those fit very, very well together. And, we will defer to the agent on any recommendations that they make as far as, any of those insurance products.
So how would an agent go about marketing or presenting this idea, demonstrating to their client that they have another idea for a portion of their portfolio? Marketing pieces, what do you have for them?
Yeah, we will have marketing pieces. We'll have some training. We'll have a website that will provide the training for what they can say, what they can't say. We'll have sample scripts that they're welcome to use if they like. The only thing that we really are careful that they do not say is we don't want the agent saying that they are managing the account. Short of that, we have quite a bit of flexibility on what they can say and can't say. But basically, I think a pretty logical script is that agents can say to clients, look, we have this question come up all the time. We wanted to find a solution, and here's the solution that we came up with. In fact, we were so excited about the solution that we entered into a formal arrangement with this group so that we actually share some of the fees so that we're in the loop. We're included in what's going on here. And we have a vested interest in not only what the asset management's doing, but also in how the client experience is as well. So it's not just a sell it and forget it. It's a network of professionals that are looking after not just their insurance, but now also their managed accounts as well. What we've seen in our experience is that agents end up doing more business because they're getting in front of bigger and bigger clients that have more substantial assets. As I look at it, it's a lot easier to say to a prospective client that has $100,000, difficult to put $75,000 into an annuity. But when you're talking to a client that has $1 million, to say we're going to put a third of your money into an annuity and the other 2/3 are going to be liquid and professionally managed, that's a lot easier conversation to have. Now, obviously, there aren't as many people with $1 million as there are that have $100,000, but if you have better tools to present to that client base, you will attract that type of person.
And as far as performance expectations, if an agent says, well, in a fixed annuity, I can pretty well guarantee you're going to make somewhere between 2 to 4%, maybe as much as 5 or 6%, which sort of expectations should they set for the managed money? Careful expectations.
I'm always quick to tell people that, if inflation stays at 0.25% for the next 10 years and we make 5%, I'll be thrilled. Mm-hmm. If inflation goes to 10% and we only average 11%, I'll be disappointed. So we do have a documented track record for 13 years on our equity portfolio, and that return is right at about 10% per year, but it's with about 2/3 of the risk of the overall stock market. And that is gross fee before our fee, which our maximum fee is 1.5%. And we hold all of our accounts at Fidelity Investments. So they can access their accounts through Fidelity.com. They'll get their statements directly from Fidelity.com. If they're adding money to the account, they make a check out to Fidelity Investments. If they need money, the check comes from Fidelity Investments. So it's very transparent. It's very, very simple to get them to a comfort level because we are just the advisor on that account that we recommend they hold at Fidelity. So we charge a quarterly fee, and our maximum fee is 1.5%. And for that 1.5%, we will invest in a equity portfolio of mostly exchange-traded funds. So the overall cost to the client is going to be about 1.7, 1.8% per year, which is less than what they would pay if they bought the average no-load equity mutual fund with no assistance from anybody. So we think that it's a pretty cost-compelling value proposition, but yet there's enough in revenue there that we are able to share with the agent if they're introducing us to clients.
Okay, well, that's great, Tony. Thanks for all that information. And for anybody out there who'd like to find out more about how to get started, go ahead and give us a call at Silverside Insurance Marketing, 480-998-1286. We'll get you the support information, and we'll get you in touch with Tony and his people at Asset Management Strategies. Thanks for being with us today.